As Oki said, a proper big bank. But why is a banker stood on stage at a customer experience event talking to you about customer experience? You know, surely you want the rock star fintech startup telling you about all the amazing things that they've done. I mean, I can't remember the last time that somebody from the John Lewis Partnership picked up the phone to me and said, God, you're doing some really cool customer experience stuff at Barclays. We want to come and learn about you. You know, the Ritz-Carlton have never asked to come and visit one of our branches. I say, you're just doing some amazing stuff around customer experience. We could learn so much from you. So why have you got a banker on the stage talking about customer experience? And I feel like I need to answer that question before I can just share with you some of the things that we've learned about customer experience. And the first thing is, we've got a lot of customers. And those customers have a lot of experiences with us every single day. So as Barclays, we've got a relationship with 1 in 2 households in the UK, 24 million customers, and they have over 2 billion experiences with us every year. Now, I don't put that out there to say that every single one of those 2 billion experiences are absolutely amazing. Some of them will be. Some of them will be not so great. Most of them will just happen on a daily basis. But, you know, it's a lot of experiences with a lot of customers. So we've got a lot of experience about those kinds of interactions. And I think it's particularly interesting for big banks like Barclays when we talk about the relevance of being physical in a world that's becoming ever increasingly digital. And I know you've had lots of tech companies talking to you today and you know, non-tech people about the relevance of digital solutions in people's lives and in terms of delivering customer experience. But you know, those 24 million customers, we consider them to be our biggest privilege, our biggest opportunity, but also our biggest challenge. And if you think about society as a whole, it has a very polarized view of what the relevance of banks is, particularly when the relevance of being physical in a digital world. And there's just 2 headlines. They're a bit old now, but I think the sentiment is still valid. 2 headlines, 2 different papers, same weekend. One headline says, high street banks must go the same way as shipyards. Bank branches are irrelevant, close them all down, turn them into wine bars. Another headline, basically casting all bankers out as being social pariahs because we've dared to close a branch somewhere. Now, the truth and the reality is probably somewhere in between, but I think those headlines reflect the polarization of views of consumers and society as a whole in the UK when it comes to the relevance of banks being physical in a digital world. But why else should a banker stand here and talk to you about customer experience? Well, we've been creating experiences for 327 years. So lots of customers having lots of experiences, and we've been doing it for a really long time. So I don't stand on stage as a role model of customer experience. I don't stand on stage claiming to be someone who is a global market leader or represents a bank that's a global leader in delivering customer experience. But I certainly stand on stage as someone who, part of a company who I think has learnt a lot about customer experience, good and bad. And I thought I would just share with you some of the things that we've learnt today. Before I get into that, I thought I'd share with you this picture, one of my favourite pictures by an artist called Richard Long. I don't know if anybody's ever heard of him. And as you can see, this is a photograph called A Line Made by Walking. Now, as well as being a banker, I'm an assessor for the Duke of Edinburgh award scheme, and I go out with young people and I assess them when they go out on their expeditions. And one of the policies that we have as part of that scheme is that the young people must leave no trace. We have a no trace policy, and we're scrupulous in checking their campsites after they've packed up their tents and they leave in the morning to make sure that there's no Mars bar wrappers or tent pegs or anything they've left behind. Because our philosophy is, you shouldn't leave a trace of where you've been. You know, you should leave a place just as you found it. But this photo really makes me think, this idea of not leaving a trace of where you've been, it's actually a bit of a ridiculous notion, which I think is the point that Richard Long is trying to make in this photograph. Because he made that line just by walking across the field. So wherever we go, we leave a trace. Whether it's a line in the grass, whether it's footprints in the sand, whether it's a carbon footprint or a digital footprint, we can't help but leave a trace. And I think it's a bit like that with customer experience. So like it or not, your customers are having experiences with your brand and your organization right now. We can't help but our customers having some kind of experience of the brand and the service that we offer them. So I think it's down to us to then make choices about what we want that experience to be like. I don't think customer experience is something that you can choose to do. You can only choose how you want those experiences to be, because customers will have experiences anyway. Anyway, 7 lessons that we've learned about customer experience, and these are things that we've learned, particularly as we've been going through our own transformation program, and as we've been becoming more of a digital bank and thinking about what that means from a physical perspective. The first one, the technology just has to work, and it's just got to be easy to use. You know, and as I reflected on some of the big transformation programs that I've been part of, most of the effort, most of the investment goes into making the technology, building the technology. I would probably say 80 to 90% of the investment goes into the technology solutions that we build. But actually, from a customer perspective, all they care about is, does it work and is it easy to use? And I think, therefore, it's important to invest as much, if not more time, into the human aspects of design and the human aspects of transformation as it is into the technological aspects of transformation. Because, again, customers just want stuff to work and they just want it to be easy to use. And when we make a promise that we're going to offer customers a different experience, a different solution, that does come with some implicit expectations that, you know, the technology is going to work and it's not going to let you down. So a really important thing that we learned as we were going through our technological transformation. The small details make a really big difference. And I've put up a picture there of a stiletto, because I think about one of the things we did in some of our branch transformation work. And I think particularly about the colleagues who worked in our branches. And for many, many years, in fact, for most of our 327-year history, if you worked in a bank branch, you sat behind a counter. And there were lots of female colleagues who would sit behind a branch counter and be quite comfortable wearing high-heeled shoes all day. When we then changed that model and we changed that experience so that actually we turned the technology around and let the customer access it, and we moved the colleague out from behind the glass to in front of the glass to effectively stand next to a customer and help them to do what they're trying to get done, that becomes a different experience for the colleague as well. So I think about our Windsor branch and our amazing team at Windsor. And I went there on day one of this change that we'd implemented, and the team looked amazing. They'd all got their brand new Barclays corporate uniforms on. Lots of the ladies had really smart, high-heeled shoes on. They were ready to rock it. They were ready to go and really make this change work for their customers. I went back on the Friday, and all the women were walking around in flat shoes saying, do you know what, my feet were killing me by Tuesday lunchtime. And how do you think that affected the experience that our customers received? When you've got colleagues who are on their feet, they've got their feet are aching, they're feeling a bit tired, it's just different for them. That's not going to create a great experience for our customers. So it might seem like a really small and trivial point, but I think the one thing that we learned was that the small details make a big difference to the customer experience. Customer behavior is not always rational, but it is predictable. And I think this is particularly relevant for companies like Barclays, where people have been banking and experiencing the brand in the same way for many, many years. It becomes a routine. It becomes part of daily life or weekly life. And I remember the story of one customer who was particularly unhappy about the fact that we'd disrupted his routine. We'd disrupted his experience with the bank. And what he was unhappy about was that he always came into the bank on a Monday morning to pay in his cash and checks. He was a small business customer, and he'd got his credit book with his cash and checks in, and the banker would take them, stamp the book, and give it him back. That was his routine. And he was so angry. I thought at the time, looking at it through a banker's eyes, that he was almost irrationally angry. And I tried to understand why this was and talk to him about it. And he said, well, I can't get my book stamped anymore. I said, but you know, yeah, that machine, it's quicker, and it will give you a printout to say exactly what you've paid in. And on the back, it'll give you a photocopy image of all the checks that you've paid in. Isn't that better than just a simple stamp, which really doesn't say anything and doesn't prove anything? And nothing I could have said rationally would appease him. And that was because, you know, it was a very emotional thing that we disrupted his behavior. But that wasn't just that one customer. We saw that repeatedly when we disrupted the way people had been doing things for many, many years. Even though we could rationalize it ourselves, because it was quite an emotional thing for customers, it became really difficult to rationalize it for them. But who's right? Of course, the customer's right, and we have to deal with the emotional change that they're going through as much as we deal with the rational change ourselves. But the behavior is not always rational, but it is predictable. People are most likely to use self-service or digital solutions if they perceive that they will be negatively judged by a person. And we observed a phenomena in some of our branches, and we were looking at what we were doing was doing some observations on how customers moved around a branch. And we were able to track through MAC codes on their phones where the hotspots were and what people were doing. And we saw this pattern of customers who would go to one machine and do something, then go to another machine and do something else, and then go to a counter and talk to a person and do something else. And we were a bit perplexed by this because we tried to design things so that customers could do everything they wanted to do at one touch point with us. So we went and looked at our data, and we were still perplexed because what we were seeing was a customer would be going to one machine to check their balance, then going to an ATM to withdraw some cash, and then going to the counter to pay a bill. And we thought, this is really weird, and we couldn't work out why this was. And I came across some research done by Harvard University, which they did in partnership with McDonald's. And what Harvard and McDonald's found, you know these self-service kiosks that lots of McDonald's restaurants now have, what they found is that there was a 30% higher conversion to supersize meals when customers ordered a meal through a self-service kiosk than when they ordered it at the counter with a person. And the psychology of it was, when somebody was stood talking to a person and that person said to you, would you like an extra large meal, sir or madam? You were probably, well not probably, there was a stronger possibility that you'd think, if I do that, they're just going to think, you know, I'm fat enough already. I don't really need the supersized meal. Yet when there's nobody there to judge you, because the faceless digital screen doesn't judge you for having more calories than you really need, they were seeing a 30% higher conversion. So when we applied that to our scenario that we'd observed, what we found was that these were customers who were living on the breadline every month. They were getting to the end of the month, they were running out of money, but they needed to pay a bill. So what they were doing is they were going to one machine to check their balance and see what transactions were coming out, to check if they had enough money to pay the bill. They would then go to the ATM and get some cash out. They'd then go to the counter and talk to the person and pay the bill. They could have done all of that at the counter, but they didn't want to ask the person if they didn't want to say, oh, can you give me £20 to pay the bill, only for that person to tell them that they didn't have enough money. They wanted to overcome that emotional fear of embarrassment in a very non-judgmental, self-service channel. So again, it was a very human, a very emotional factor that was driving the behavior that really helped us think about how we then design experiences that help customers. Because of course, that thing you can see there is good and bad. You know, is it a good thing that it's easier for people to supersize their meal and not have that emotional resistance to doing it? Is it easier for people to be able to borrow more money and not feel like somebody's judging them. Yeah, there's a fine line and to sort of tread there in terms of doing what the right thing is for customers. But having that behavioural understanding is really helpful. But what we did find is that people trusted their banker more than they trusted themselves, which sounds a bit weird, doesn't it? You know, people trusting bankers. I think people trust banks. People don't necessarily trust big banks, but they trust their local banker. The biggest reason why people didn't like to use machines to do their banking was because they didn't trust themselves. And actually, if I give my money to that person in the uniform with the Barclays name badge on, I trust them to get the transaction right. If I have to use the machine to do it, I might use the machine wrong, and then that's my mistake. So people absolutely trusted their banker more than they trusted themselves. And again, that was just a really interesting behavioural insight, because we then had to, when we're designing different experiences for customers, we had to address that need for reassurance that customers have, that we all have. You know, it's okay, you're doing the right thing. You know, we've got to build in those checks along, even in our digital propositions, we have to build those in. And people are prepared to wait 5 times longer to see a person than they are to use a machine or do something in a self-service way. And, you know, for a long time, we're able to correlate we've been correlating queue time with NPS, and we always do that chart that shows, you know, we're kind of okay until it gets to 5 minutes, and then NPS drops off a cliff when wait time gets over 5 minutes. When we started to put in a lot of automation and a lot of self-service, and we plotted at those exact same charts, after 60 seconds, NPS drops off a cliff. So people will wait 5 times longer to see a person because of well, I think it's because of 2 reasons. One, it's because the implicit additional value that they perceive they're getting from that human interaction. But also, if you're going to implement something that's about technology and about self-service, there's an implicit promise of speed. You know, you're doing this to make it quicker, and therefore, if it's not quicker, you're failing on that promise that you made. And so it's really important that we deliver that promise. And lastly, sometimes simple is better. How much was it that NASA spent trying to build the infamous space pen? You know, they spent millions and millions of dollars, and the Russians just took a pencil into space. I think you know, we're at risk of being, you know, we can be very proud of our digital apps and our technical solutions, and sometimes we'd sit there and wonder why people weren't flocking to use them in their millions and millions. But actually, sometimes a simple solution is better. One group of customers that we observed were customers that would come into their local branch every single month to do something really simple, like pay their gas bill or pay their utility bill, whatever it was. And we were intrigued about, well, why would anybody want to go to the effort of going into town, walking into the branch, you know, however they would do it, whether it's cash or check, whatever it was, queuing up to pay their bill, pay their water bill. Why is that? And we try and talk to them about, you know, you've got a phone, why don't you download our app, do it all online, do it all digitally. And yeah, the customers would sit there and say, no, we don't really want, not really interested in all of that. But you know, a simple direct debit, it solved the problem for the customer no end. And actually they said, no, I can pay by direct debit, that's really cool, that saves me the hassle. But no, I don't want all your fancy apps, you can keep them. And I think when we think about customer experience, the lesson for us was, and it sounds so obvious, but think about it through the problem that we're trying to solve for the customer, the job that the customer's trying to get done, not necessarily the solution that we would like them to use. And I just finished with this quote, which it's a little bit old, but I think it's still relevant, particularly in the world of banks. It's the Boston Consulting Group did a report on retail banking a while back now. But in a sense, retail banks must become bionic. They must provide digital functionality for speed and convenience, as well as thoughtful, caring human interaction when the customer needs and demands it. So the reason why I think customer experience is particularly relevant for big banks like Barclays, if you think about the financial service marketplace, all the products are largely the same. Anyone can can do a loan or a current account. There might be slight differences in rates and terms and so on. We've all got branches, some have got more than others. We've all got apps, some are slightly better than others. The thing that will make the big difference, I believe, in what is a market that's becoming highly disrupted by fintechs and new competitors, is the customer experience. It's how we can seamlessly knit together digital for speed and convenience and the caring human interaction when the customer needs and demands it. And so it's the customer experience that will really, I think, make the difference between the winners and losers in retail banking. So with that, I'm going to finish there. And Oki, I think we've got some time for questions.